Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, India has come a long way as far as women empowerment is concerned, from facing the professional challenges head-on to caring for their family, raising children, paying bills and even running a household. The woman of today is doing it all. However, research tells us that we still have miles to go when it comes to women's active participation in investments. As per a study conducted by Nielsen, about 77% of women working still depend on their fathers or their spouses for making investment decisions. It is quite unfortunate that most women are only informed about investment decisions already taken on their behalf. At best, they are the joint decision makers. Now, the need of the hour is for women to take charge of their own investments. In this episode, we are going to provide clarity on how you can go about planning for your investments, for your financial future. Let's welcome Yashish Dayavida, CEO and co-founder of Policy Bazaar in our studio. And we're going to talk about, of course, we're talking about women's empowerment. Yashish, why is there such a reluctance on the part of women to actually go out there, make their own informed investment decisions? I'm not making a sweeping kind of a statement, but that's what the research is showing, that the majority of them don't.
Yeah, no, clearly, none of us are trying to generalize here. Clearly, some of the leading banks of this country are run by women.
Yeah.
So it will be naive to say that women are not knowledgeable about financial products. But at the same time, one has noticed in general that women do not take always the first step in terms of financial planning, and that is largely left to the man in the household. And I think there is a huge amount of advantage to the women getting involved in financial decisions. See, usually the woman is the homemaker, is the one kind of responsible for keeping the home together. And specifically when you're looking at financial decisions, which are not just returns specific, but which also are more holistic and take into account the risks that a family can face, whether it be a particular disease, whether it be an unfortunate death in the family or an untimely death in the family. In all those situations, one many a times finds the woman to bear the brunt of that situation. And hence, in planning around risk, I think it's very important that women do start getting engaged and start getting involved, because some of those factors, whether it is health, whether it is unfortunate events that can come into a family, or whether it is preparing that nest for the kids, I think it's critical that women get involved. And we also see on another side, we also are seeing some breakup of families, and of course that doesn't happen to everybody, but that is also a possibility. In that situation, again, the woman who has not taken hold of finances can find herself in a slightly difficult position.
So let me understand what you're saying. What you're saying is that it's important for women to be independent when it comes to investments. It's important for them to have a good understanding of what those investments are, what the nest is all about. And so how do you differentiate that, say, between a woman's perspective of investments and the way she would look at it? Compared to how the decisions are being made by the spouse or by the father?
Yeah, I think, again, generalizing here, but for a majority of women, the decisions are more defensive. The decision is not about the most aggressive or the most risky investment. The decision is more around the plan B. What happens if? What happens if? What happens if this goes wrong? What happens if this goes wrong? And I think the questions that would come up there, in many situations, you find that the husband could be the primary bread earner. What happens if there is an unfortunate event there? What happens if there is a separation? What happens if there is a big disease in the family? Also, at the same time, it can also be the other way around. The woman also understands her own responsibilities. While she's keeping the family together, she's taking care of the kids, she's taking care of the family. What if something happens to her? How does the family then address that situation? And I think as one looks at that in an all-encompassing manner, that view can come much more strongly from a woman than from most of the men who would have a singular, more singular track approach to things.
So what would, let's get into the specifics, what would the alternative investments be available for women?
I think when you talk about alternative investments, I think there are, of course, the fixed deposits and the mutual funds that are mostly available. But many women would tend to also take care of the worst case scenario that, when you are looking at products which have a component of risk involved in them. So let us say the life insurance products, but not the life insurance products which have very low returns. You can have the life insurance products which have fairly high returns. You do have long-term retirement planning products which would ensure that once the woman is retired or once the family has retired, there is enough money available to take care of needs. One would make sure that when investments are made, there is dual life coverage. So let me explain. If a pension is taken by the male, most pension products would stop paying at the, at the demise of the policyholder. Whereas in a dual life kind of plan, what would happen is whoever stays alive till the end will keep getting the benefits of the pension. And it is pretty likely that somebody is going to live longer than the other. It could be the male, it could be the female. I think taking into account that particular parameter is important. When one comes into pure risk planning, because that is also a format of income that needs to be supported. In case the primary bread earner has an unfortunate event like a death or a disability or a critical illness, in that situation, creating an income for the family through products like insurance becomes very critical. Having basic health cover for the family to make sure everybody is covered is again very critical. Having some form of coverage for herself in case something unfortunate happens to her, which is again in the form of an income-based support, because you may need somebody else to come into the family, take care of things, in a supportive manner. And all of that does need to be supported through the income base, which will come in from a term policy. So essentially, more focus on life coverage, more focus on disability coverage, more focus on health insurance, and more focus on pensions. But in pensions, making sure that it's not, there are very few plans that have dual life cover. Making sure it's a dual life cover. It is those small things that would ensure that the plan is more women-centric than the male-centric.
So what are the things to keep in mind when a woman is buying an insurance plan?
Yeah.
What are some of the steps to look out for? I mean, you've gone through some of them, but can you be more specific?
It totally depends on the life stage of the woman. So let's kind of break that up into somebody who's not yet married, somebody who's married, somebody who's gotten above 45, the kids are sort of at college or something. And then finally, there's somebody who's kind of retired. For the person who's not yet married, it will, there is no risk component. She does need to have a basic health cover. And whatever money they're receiving, they can start investing in short-term funds if they want guaranteed returns within a 4-5 year period and they want to plan once again post-marriage for what they want to do with their finances. Alternatively, they're quite sure that they want to start preparing for a pension pretty early on. They can actually start investing in a pension. Why should a woman not be able to invest in a pension well before? We've gone over multiple times that if somebody saves the first 10 years of when they start saving, that can be far more productive than saving for the rest of their life. So clearly, those early savings can come in very handy in creating a pension pool or creating a nest for themselves. The second component they need to take care of is, suppose they are married. Now there are going to be costs like maternity. There are certain health insurance plans that the single plan will move into a family plan, but with the family plan you have certain plans which can allow maternity covers to be taken very quickly. There are 2 or 3 plans that even allow you to have a cover as soon as 1 year or 9 months, etc. So those need to be considered. As far as once one is married, one also needs to think about life insurance in a very serious manner, both for the spouse and for themselves. And think about how the payout needs to come in. A one-time payout may not be the best solution. It may be much better to get it as income over a period of time, maybe a 10-year, 15-year, or even a pension format. If there are children in the family, then having child plans, because there would be aspirations that both husband and wife would have for their kids, and the kids would also have certain aspirations for themselves. So clearly, planning for that is important. And those are the 10-year investment plans that you would have. But again, when you take it as a child plan, the risk is covered from day one. So it makes sure that the money is available when the child comes of age. And then finally, you have the retirement, which you have been saving ever since you were single, all the way till you are about 60. You keep planning and making sure that you have sufficient money for the retirement stage. But I think if one does take into account all these pieces, then they are far more prepared and far more aware. And in case there's an unfortunate eventuality, they are far more in control than sort of not being so.
Right, Yashish, of course, we've talked about the insurance factor. What about health insurance? Now, do women need to keep in mind about a specific kind of a plan, and how would they actually plan that?
So clearly, women can suffer from different diseases than men. Most of the basic plans that cover both men and women will cover women for most of the diseases that women would have as well. However, there are certain women-specific plans from a disease point of view. Clearly, there are certain diseases only women will have and have a higher propensity of, and at different stages they will have a higher propensity of those. These plans would usually provide a more holistic cover for those particular diseases, and there will be a little more coverage than the base plan. So you would have a lot of most of the basic health plans will cover you when you are in hospital. But some of these plans will cover before hospital and post-hospital, etc. For that specific disease, so they're planned around that specific disease. So one can look at those. As the second component of women's centric plans are the maternity covers. Now, most maternity covers have a cap of about 25,000 rupees to 50,000 rupees. The good news is there are some plans coming out. See, a woman doesn't decide whether she's going to have a normal delivery or a cesarean or whatever. There may be complications of various sort. That's not her fault. That just, it happens, right? And clearly now there are plans coming out. If one waits for another 3-4 months, there are some plans coming out which will have no limitations whatsoever. They'll just cover maternity, that's it. Whatever happens then is covered. So I think that's a good trend that one is seeing. So I think that is what one should take care of when one is looking at health.
We're talking about women's investments in insurance and health, and we were talking about maternity covers, we're talking about health covers. Yashish, what if the woman's husband has insurance policy from his company or a group insurance policy? Is that adequate? Does that kind of work as a good alternative to an individual health policy that the woman may or may not have?
Okay. So if the husband or the wife, whoever has the health insurance policy with the company, most of these plans are fairly limited. They are, first of all, they're not guaranteed beyond 1 year, which no health insurance plan is, but technically they are fairly limited. They will have a 1 lakh to 3 lakh cover, and they will be fairly limited in terms of what they cover and what they don't cover. The good news about these plans is they don't have any pre-existing exclusions, etc. So usually you are allowed to take benefit of these policies from day one. Now, as far as having an individual plan of one's own is concerned, see, most of us are going to face large health costs after we are 60. And that is after we've retired. And most of us will struggle with getting a good health insurance plan after the age of about 50. Because, and I'm generalizing here because some people will stay fit into their 80s and some people will be unfit by 40. But the fundamental thing is, as one gets older, chances of one or other of the chronic diseases hitting is very high. It gets higher, and if they hit, then it's very difficult to get health insurance. So relying on a group company health cover to be your lifetime cover is a bad idea. One has to have their own cover. Now they could do it in multiple mechanisms. They can have a standalone cover of their own, or they can have a top-up cover. These days, see, health insurance companies understand this, and they are innovating. So what's happened is you have a 3 lakh rupee company cover, you take a 7 lakh rupee top-up on that. So you actually have a 10 lakh rupee cover. The first 3 lakhs the company policy pays. After that, the next 7 lakhs the insurance company you've taken a policy with pays. The day you retire, you have the option of taking the first 3 lakhs from the same policy. So you can expand your policy downwards and make it a 10 lakh rupee policy. There will be no medicals then. What a massive advantage. You are getting into the policy when one is 40, paying a very small amount because the 3 lakh to 10 lakh will cost very little, and you have a 10 lakh policy for life. Of course, that you could get excluded from such an option if you do not take such a policy. You wait till you are 60, one or the other disease has struck, and then people say, sorry, because of medicals we cannot, we hear all the time that a person cannot get health insurance because of medical condition.
Right.
Well, that can happen in 20 years' time.
Right. So at the sound of, being a little repetitive,
yeah.
But, it's an important point. Now, if women, how would you decide on the pros and cons of women-centric insurance plans and medical? So, I mean, just like a 1, 2, 3 kind of points.
As a rule of thumb, I would go for the standard health insurance plans, because the standard health insurance plans actually are lower cost than the specific ones, and they actually do not exclude other situations. The only reason I would go for a woman-specific or a disease-specific plan is if an individual believed for some reason that they had a higher propensity to those diseases. Because those plans are very accommodative in terms of those particular diseases. See, every disease has its own care. Some have hospitalization, some do not have hospitalization, some you will spend 2 years before hospitalization, 2 years after hospitalization. Many of those things are not covered in a standard health insurance policy, which is largely designed for a basic cover. So having those specialized cover, whether it's a cancer cover, whether it's a woman-specific cover, which would have things like ovarian cancer, breast cancer, etc., covered. Now, whatever these diseases are, if you have that particular cover, it will be more specific and will have greater empathy for that kind of disease. So, but it will be a little more expensive also. So, my suggestion is, in case one is largely fit, one can go for the standard plan. But if one suspects there is a chance or there's a heredity of something, then you should go for the women-centric plan.
So what are some of the plans which are available? Because there are a lot of plans, and you said a lot of innovations are coming, and we're going to see a lot more in the next few months.
I think Bajaj has one, the Max has one. There is Religare has a very specific plan called Joy, where maternity is covered within 9 months. It's of course quite an expensive plan, but it is covered. There's very soon a plan, and it covers maternity up to 50,000 rupees. There's a plan coming in from Bajaj very soon, in the next, by June end it should be coming in, where there is no limitation on the maternity cover. There is, before Religare and Bajaj, Max used to have very women-centric or maternity-centric plans, which would give you maternity cover within 2 years. See, most of them have a wait period of about 4 years. A wait period for 4 years in maternity is quite long. 2 years is what Max used to offer. So I think there is a lot of innovation happening, and I wouldn't like to say there is one plan that solves all problems. Quite honestly, there are more than 200 plans out there. So one has to kind of really do some research and figure out what specific situation they're looking for, and then kind of decide their plan.
What about retirement planning? Now that's an important subject. People are thinking about it. You talked a little bit about it.
Yeah.
How does a woman go about planning for her retirement if she's been working from a young age?
I think, as I said, the first thing one has to make sure that whatever policy they are taking, there is a dual life cover in that. There are a few policies that are, and if that means there's a 0.5% extra cost of that plan, one should take that 0.5% extra cost and take the dual life cover. But the dual life cover, according to me, is the most important thing as far as women and men are concerned. See, chances are, in most Indian marriages, again I'm generalizing, the woman is about 3-4 years younger to the men. Life expectancy of women is another 5 years more than men. So that principally means that on average, women will outlive men by about 10 years. That's again average. Of course, it doesn't happen all the time. So in that 10 years, and those are the, economically, those are one of the tough 10 years.
Precisely.
Clearly, having a pension cover at that stage is critical. And that is why you need a dual life cover. I think men who really think about their wives should be thinking about a dual life cover, even if that costs 0.5% extra. The other thing that women probably need to think about is also breaks, because many women take breaks, sometimes 5 years, sometimes 7 years, sometimes 10 years. Sometimes they just take a break from a career. The career was going very well, but as kids happen, they just take a break and they kind of never come back to a career. I think having your own kitty has its own strength and its own peace. So creating something early for that situation, and not always, of course, you're married and it's kind of one thing, but if you have that specific 20,000 or 30,000 rupees of your own, which keep coming in from some saving plan that you've created, I think that's very valuable. So in a way, for some women, the retirement part, it's not really retired because they're working at home, but it gives there is more freedom with that money than...
a little bit of a comfort there.
Yeah, a little bit of a comfort. Absolutely. So I think that's important.
Right, Yashish. Well, we've taken a couple of questions from our viewers. We've got Preeti, and she'd like to know about a health insurance plan for her father, who's 59 and he's suffering from Alzheimer's disease. She would like to opt for a cover with hospitalization and home care. What would your recommendation be?
I think going for a senior citizen plan would be good. It will have a component of copay, because it will be difficult to get through a medical and get a clean zero copay plan. But there are lots of senior citizen plans which start at about 60, so maybe they have to wait for a year. start at 60 and cover, you can have an entry up to 75 and they cover up to 85 or so, and sometimes even longer. And in those senior citizen plans, I think there's a copay. You would have between 20 to 50% of the cost would be paid by the individual, and the rest would be paid by the insurance company. And I think getting into a plan of that sort makes a lot of sense. And they're usually much lower cost than the plans. So you basically take the best of both. You don't take the entire.
Would it be difficult for Preeti to actually get that cover for her father, because she says that he does have Alzheimer's?
It can be tough, but if you try for the senior citizen plans, many of them, they are quite understanding towards these situations. And specifically, as you take the biggest risk, one big risk that health insurance companies face today is that of over-medication. Because you go to a hospital and the hospital makes whatever bill it feels like, because it keeps you longer, etc., etc. If there is copay, the amount of sincerity on cost it brings from the patient is
so
very high.
Copay
Copay basically means if there's a 20% copay, it means 20% of the cost will be paid by you, 80% will be paid by the insurance company.
Precisely.
But what that means is, if you're going to spend 5,000 rupees on a particular surgery or a particular thing, 1,000 rupees is going to go from you. So you'll think about it. You won't just do it. It's okay, let's just do it because the insurance company is paying for it. So I think that 20% copay is very critical to containing insurance costs. And that gives the insurance company the comfort that the person has their interests aligned, and they sometimes do provide cover.
Right. We've got Suman Sharma. He's 60, wants to know if she can opt for a super top-up plan against her health insurance cover, and can she get a top-up cover at this age? If
Yes.
not, can you recommend an alternative, she asks?
Yes, she can get a top-up cover. So first of all, it depends on her health. Getting a new cover always depends on health. But top-up covers are a little easier to get because they are not covering you for the day-to-day diseases, because the day-to-day diseases are largely covered by your base plan. These are really covering you for emergencies or large diseases, which are very difficult to predict. So you can get a top-up cover all the way till 65. And once you have a top-up cover, you can always migrate it back downwards to cover the base plan as well later. But yeah, up to 65, you can get a top-up cover. The highest age for getting a top-up cover today is 65 years.
Right. Yashish, we've got Sati Raju Ganesh, and he would like you to recommend a health plan for his mother, who's 56. She's diabetic and has undergone a hysterectomy surgery. And what would your recommendation be?
I think Star Health has a good plan for diabetic care. One should also look at Max and L&T health insurance, even Cigna. But Star has a specific diabetic care product that one should definitely explore. I would say just go in and kind of explore a few options, but I think Star might be the choice for them.
Thanks, Yashish. That's all the time that we have. But in our last episode, we asked you a question. We asked you, what is a no-claim bonus or an NCB? Is it A, discount on premium on own damage cover, B, a discount on premium on third-party liability? And the correct answer is A, discount on premium on own damage cover. Congratulations, Nikita. You won a gift voucher of 1,000 rupees. Now, this week's question, the regulatory body of insurance is called what? A, GIC, B, IRDA, C, Finance Ministry. And then send in your queries to queries@policybazaar.com. Thanks a lot, Yashish, once again. And we'll see you next time with another episode of Policy Bazaar. But you can tweet us at Twitter @PolicyBazaar_in. Goodbye.